Hey, it's Greg. February 2023, month gone already. Real estate stats came out for the Fraser Valley. Let's get into it. Okay, we take a quick look at the press release, and it's what we've heard on the news. Fraser Valley real estate sales have had their record slowest annual start in 10 years. January new listings are lowest in over 30 years. There's a downward trend in Fraser Valley real estate sales, continued after further interest rate hikes, which have gone up yet again. There was another interest rate hike on January 25th. So slow start to the year, not a lot of inventory either. It's keeping prices in check because we're not flooded with inventory, which I'm sure you've noticed. All right, take a quick peek at the MLS Home Price Index here in the Fraser Valley for January. We can see that 1 month change is really the biggest thing that we're taking a quick peek at. We're seeing for detached houses in Fraser Valley, the 1 month change has gone down 1.4% for the month compared to December. 3 months, it's gone down 5.5%. 6 months, it's gone down almost 15%. And a year, the prices have gone down this time last year for a detached house in the Fraser Valley by almost 18%. You can see the sub areas here. You can see Fraser Valley, you can see North Delta, North Surrey, Cloverdale, South Surrey, White Rock, Langley, Abbotsford and Mission. You can see that they're all in negative territory, more pronounced in the Eastern Valley, with Mission being down 3.4% compared to an area like Surrey, where it's only down just 0.4% month over month. When we look at townhomes as well as a whole, they're down 1.8%. Again, over the last 3 months, 4.5, 6 months, almost 12%. And this time a year ago, they've softened just under 9%. Okay. Again, there's variation in the different sub areas where there's a slight increase in townhomes in North Delta, and in South Surrey and White Rock, they've gone down almost 3% in a month. So there's a variation. Like we always talk about, the market is made up of many sub-markets, right? We've got areas and product. And when we look at apartments, you can see that the Fraser Valley has just gone down nominally 0.2%. Most of the areas are actually in positive territory, including, look at this, Cloverdale, an increase month over month of 7.6%. I'll show you some stats in just a minute here, but you can see that they've rebounded quite a bit. We'll see if it's just an anomaly. It is possible that it could just be some sort of weird anomaly. Next month, if it's down 6%, that would kind of fluctuate, kind of take out any bump up that's rapid with a softening. So we'll see how that goes. But if there's another increase next month, then this won't just be an anomaly. It will be a noticeable bump up in the condo prices. Okay. Switching gears, we're taking a look at the mortgage news. You can see that this time last year, the rates were ultra low, and basically right around March, you can see they started to climb with those large interest rate hikes that we saw throughout 2022. The last one, like I mentioned, was January 25th, just a couple weeks ago, at a 0.25% increase. So we will see how this continues through the 2023. I'm sure interest rates will continue to be a major story. Inflation, recessionary concerns, all that sort of stuff, inventory. These are things we're going to constantly be talking about throughout the year. I love this graph. It's the Fraser Valley Real Estate Board's months of inventory. And I love it because it really shows how the market conditions are doing and the impacts of certain events that happened throughout the last decade, including the foreign buyer tax that happened in 2016, mortgage stress test in 2017, 2018. That was federally, by the way. Of course, COVID-19 that impacted us right in spring of 2020. And starting March of last year, the interest rate, the first rate change, and you can see every subsequent month. So the lower the numbers here, you have low months of inventory. And you can see from 2020 to 2022, we had low months of inventory. That led to a seller's market. There wasn't enough product for the amount of buyers and demand. That's when we saw the prices really start to skyrocket. Look at this. So low here, 1.5 months of inventory. That means if there was no additional product put on, no additional townhomes, condos, houses, we would run out of available homes for sale in as little as 1.5 months. So those are incredibly low numbers. Balanced market is between 5 and 7 or so, and then a buyer's market is above that. So you can see right now we are in a balanced market condition overall across all asset classes across the Fraser Valley. That means condos, townhomes, and detached houses from North Delta all the way out to Mission, we're in a balanced market, okay? You can see we haven't really been in a buyer's market since COVID for those 2 months when everybody was stuck at home. And then before that, we have to go back almost 10 years since we saw another real strong buyer's market. And again, when we look at all different product types, right? The houses, the condos, the townhomes, we can see houses definitely are, I would say, the most in favor of buyers currently, with 8.4 months of inventory across the entire region. Townhomes at this month are the biggest in demand, I guess, with the fewest available townhomes open to people. And apartments are just touching that balanced market condition. This, again, I love this graph because it really does show you how the housing price index is doing. In a chart, you can see that the rapid rise in the detached prices back in 2020, 2021. And right here, they took right off. These are every dot is a month over month increase. You can see how quickly these prices rose. And you can see the peak where we were back in the spring of last year and where it's tailed off. Again, the interest rates rose and the home prices came down. We can start to see in the detached, there's a bit of a change here in terms of month over month. We are still seeing kind of a downward trend on price, but we're definitely not seeing the same sort of angle that we saw in the summer of last year. Same thing with the townhomes, same thing with the condos. Townhomes is in green, as you can see, and condos are in red. Okay, let's take a look at a few sub areas. North Delta, everybody loves North Delta, right? Close to the Alex Fraser Bridge. We can see that the peak of the market was back in March of 2022, where house prices was 1.655. A typical townhome was 1.060. That was a difference of about 596, just shy of 600,000. Fast forward to today, you can see that your typical house in Delta is 1.226, while a townhome is 817,000. That's now a difference of only 410,000. So the gap has actually closed over the last year. So that's great if someone's looking to move up the property ladder. It's a little easier. Now, I didn't say it's easy, right? Obviously, interest rates and all the government regulations and changes do not make it easy for buyers these days, but it's definitely, the gap has shrunk between houses and townhomes. So those people looking to move up the property ladder are in a better position now. You can also see condos have actually risen. This is, like I mentioned at the beginning, some of these sub areas have seen a bump up in the price of condos, entry-level product. It's a bit more affordable for people, so there's more buyers looking to get in. And with a lack of supply, we are seeing a few little areas where prices are bumping up. Taking a look at Surrey here, okay, we can see again the peak of the market was back in March of 2022, where houses were 1.8, townhomes were just under 970,000, and condos were 618,000. Again, this is a house price index, right? So it's the price of a typical house, townhome, condo. You can see that spread is definitely wider than where it is today. Today, you'll see that the spread for a townhome to a detached is now only 632,000, where back here it was almost 840. So again, that gap is closed. And again, look at the gap between condos and townhomes. That has started to shrink as well. Now, you'll never see the condos cross, because what will happen is as condos start to close in on the price of a townhome, we'll likely see that start to rise as well, because people are going to go for the bigger product. No one's going to buy 800 square foot condo if the comparable 1,200 square foot townhome is going to be less price. So that's why these lines will never cross. Taking a look at the sub area of Cloverdale, again, we can see the peak back in March for a detached of 1.85 almost, while townhomes were 970 and condos were 640,000. Fast forward to today, and you can see in January of 2023, the typical price of a detached is 1.35, while townhomes are 783,000. And look at that bump. I mentioned that 7.6% in a month for condos in Cloverdale. You can see it right there. You can see the jump from December to January. So we'll see. Does that mean December 2022 was the bottom of the market for Cloverdale condos, or is this going to come back down? next month or stay the same. So it'll be very interesting to see what happens here. Again, entry-level product, good neighborhood, a lot of investors that are coming out these days. We are starting to see more activity in that condo market, particularly in Cloverdale. Okay, interesting here in South Surrey, the peak of the market wasn't actually March, it was April of 2022 when prices peaked at just shy of 2.15 for a detached. Typical townhome price was 1.05 and a typical condo was just shy of 640. Again, here we are, January of 2023. You can see that decrease, that month-over-month decrease here for detached houses has started to soften. It still has come down 30,000 from last month, but it's definitely not as steep as it was in the summer of last year. And finally, let's take a quick look here at Langley, the housing price index. Again, the peak is in March, where a house would cost you just under 1.9 million, while townhomes were over 900,000 and condos were almost at 650. Fast forward to today, and you can see that price has really come down for detached houses in Langley, where now their typical house would be 1.462. You can see that's still down about 20,000 from last month, but look at the difference from last summer when they were coming down by 100,000, right? That's over 100,000 difference from July to August of last year. So that curve has definitely started to lessen. Still a downward trend. We'll see when that starts to balance out, but it's very interesting to see the difference in the last 2 months versus the summer last year. Hey, and that's the stats for January 2023. If you found this information useful, be sure to hit the like button, share it, subscribe to our channel. Let us know down in the comments that you appreciate it. We'll be sure to get this information to you again next month. Thanks for watching. Have a great day.